don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider, so you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD, Annabelle, and Melissa.
Hi guys, welcome to the Real Estate Jam podcast. I'm JD, and today I have a special guest and an awesome co-host, which is a little bit different. Today, guys, we're bringing you a lot of value with something that we get questions about all the time. And because we don't know all the answers, we decided to bring in the expert. And today we have Rhonda. She is our personal CPA, and she is the co-founder and a CPA at the Bookkeeping Express. And Rhonda, we're super excited to have you here.
So happy.
And
thank you. I am too. Yep. Rhonda is just a genius in all kinds of, we've had all kinds of crazy different things because we do the wholesaling and the flips and the short-term rentals. So she's done an awesome job trying to get us all on track on how to do that. So
with that being said, we do have to put that disclosure out that you should probably be talking to your own tax professional and your own bookkeeper, and the things that we're talking about might directly apply to us, but everyone needs to confirm with their own experts.
yes, correct. Own experts, own tax jurisdictions. Yes. Yeah. But you are versed because you've done our stuff in Texas too. So it's just that what we talk about today just might be specific to maybe Florida or another state.
Well, Texas, California, Montana, Virginia,
yes.
All the places that
Louisiana.
We're at Louisiana.
Yeah.
Well, Rhonda, usually the way it goes is I would just ask you to kind of introduce yourself to our audience and maybe tell them why they should be listening to you.
Well, I am a CPA. I have been doing this type of work since '94, and real estate is a passion. I didn't know a lot about real estate in my early CPA years, but I kept seeing all these tax returns come in with people that had real estate investments. Some of it was commercial, some residential, some short-term, some vacations. And I kept seeing what all these other people were doing. And I'm here in my early 20s and I'm like, you know what, I'm going to do this. So I started looking into it and put the bookkeeping side with it, the tax side with it. Over the years, as the tax experience grew, because what was 94? It's a lot of years ago. We won't count them. But real estate is a tremendous way to build wealth, to store value, as a tax planning tool, and it is fun as well. So that's what got me into it. Seeing what other people were doing, trying to figure out how can I do it a little bit better? How can I make more? How can I use this for tax reductions? And that has just led me to where we are today. So a lot of my clients are real estate based. And I think it's that old saying, like attracts like minds. So that's how I got here. I love it, and want to share. And I found Rhonda because I had an attorney helping me with some documents, and I said, I really need somebody. I need a CPA who just gets this part because not everybody does. And he goes, you got to talk to Rhonda Reed. She's the girl. She knows it inside and out. So thankful for that, for sure, meeting you. Yes, and it has been such a joy working with y'all. Not everybody has any document you request right on the spot, but Melissa does.
That's true. Yeah.
You know, I don't even think the email has time to get there, and here it comes.
Yeah,
So,
because I know if y'all are working on me, I want to have everything to you so you can get it done right then.
yeah.
I don't behave that way.
JD is horrible, horrible.
I am. But that's why I found an awesome partner, and hopefully she can help me do my taxes or get all my tax stuff around to you this year.
Yep.
I guess I think we want to talk about what's important for somebody starting out to know, and what are some of the most common questions you get from newer real estate investors. I think that would help our audience a lot.
Okay, and those are really two far different spectrums. The easy answer is what everybody should know, and that is proper and complete record keeping and documentation. And the reason it's so important is, one, it's required. So whatever state you go to and you organize in, when you form that LLC or that Inc., somewhere in that small print, you're checking the box that you will keep balanced and accurate books and records that the state can come in at any time and inspect. The IRS requires that as well. And it is typically one of the things that get missed. You know, people take their receipts or their closing documents and they throw them in a file, and I'll address it at tax time.
Yeah.
Well, you can't plan for taxes that way. If you don't already have some, financials in a balanced way, the tax preparer, all they can do is go in, well, let me ask for this, that, and fix it. But by that time, the year's over. You can't make any changes. You can't do any planning. You can't maximize any deductions.
Right.
So having those flawless records all the time.
Yeah.
That way, if this came on the market, but I need financing. You're going to go to your lender and they're going to say, hey, I need your interim financials. What? I don't keep my books. I do that at year end. So, but if you have your books, you can pull financials at any time for a lender or a private investor. You can pull anytime you want to do some tax planning or some scenario planning. So I would say that's the most important thing to do. You're required and it helps you. The other thing that people don't know, you didn't ask me this, JD, but most people don't know that bank statements and credit card statements, they do not count as proof of business expenses.
What?
Yeah. It shows who you paid, when you paid, and how much you paid, but it does not show what you paid for. And the IRS and the state want to know, what did you purchase? What did you pay for? And that's where the receipts and the bills that you pay, that documentation is key. So in the event anyone was ever audited, if you do not have that documentation, the expenses can be denied. So it'll be added back to your income. You'll owe tax on it. So the whole key is track your deductions, make sure you get them.
And I think I just want to make a quick point is that I didn't ask you that question, but that's part of the reason that you're so good is because you know what I want to know, and you can help me ask those questions. I don't know that I wanted to ask that question. I think that's really the key point to any professional that's helping us with our business. They know more than we do, and they have way better answers than we do.
And they tell us, Rhonda, from the beginning, part of your team is a CPA and an attorney. And so that you need to partner with all three of, not only us, but a CPA and an attorney. But I wanted to ask you to back up just a little bit, because the biggest question that I think we always get asked is, what do I do? Am I a sole proprietor where I'm just purchasing properties or doing wholesales in my name? Or when do I make myself an entity to protect myself?
Now, that question, I'll disclaim it first. I'm not an attorney,
Right.
so I'm not allowed to answer it, but I am allowed to tell you what my real estate attorney tells me. And he tells me, when you buy a property, when you do any transactions, do it in an LLC. That gives that legal protection that protects me and my personal assets from any mishaps, whether it's contractual mishaps or if it is a rental property and there's a slip and fall. That LLC is there to protect. So that's what my attorney tells me. But from a tax perspective, I can answer and tell you what I would advise. And this applies for Florida, it applies for Texas, it applies for the other states that do not have a personal income tax. The break-even point is about $6,000. If you think you're going to have leftover at the end of the year, $6,000 in profit, that is the tipping point of when, yes, go ahead and form that LLC, run all the business through the LLC, because that's when you're going to start saving the tax dollars.
Okay.
If you do it as a Schedule C on your 1040, a sole proprietor, you're going to pay not just income tax, but you're going to pay self-employment tax as well. And in an LLC, structured properly, you avoid that. You'll just pay income tax on your profits, no self-employment. And that saves well over 15%.
Very nice. Like that.
Yeah, I do too. That's a lot.
Yeah. It's a lot of money. So you can go reinvest into something else.
Yes, right.
Project.
Right. And really, that's one of the things that I always look at too, is I don't look at, when we're talking about hiring our CPA and paying for a CPA, I don't look at it as paying for a CPA. I look at it as making more money on the back end through the business expenses, because one, I don't have the time, effort, and energy to devote my whole life to learning taxes and that and accounting and all of that kind of stuff. So the way that I made the decision when I wanted to switch from doing my stuff on TurboTax or H&R Block and that way was, am I going to be making more money by hiring out something that's a little bit more expensive than, TurboTax? And in the long run, I look at it as an asset to the company, and it's putting more money into my pocket.
Yeah. And one of our stated missions is helping business owners keep more of what they make. And it's all about the planning and strategizing around their assets and how they run them and operate.
And even if you're new, I think you can offer, I know you did me when I started, different options where you can do a lot of it yourself and then you're just overseeing it, or you can you do all of it, and you and your team, and then take that off. And so that's really a great way to start and making sure you're staying on track.
Yes. And that too, that is where Bookkeeper Express is coming in. We have taken that basic program that you're talking about, Melissa, and we have worked with a technology team and we have further automated it. So it's more like a DIY with a safety net.
Yeah.
So it can be set up. You can be in charge of your own bookkeeping and accounting. With that automation tool, it's a safety net. It will ask you when it doesn't know what to do with something and say, hey, what was this for? You tell us, it goes into the system. So you kind of get you get that greatly reduced cost break from, hiring a full-fledged CPA when you're just starting out. and you don't have that budget, you can do DIY safely and
Yes.
still be in compliance. Yeah.
Let me ask you, at what point do you think somebody who is starting into this investment career benefits from bringing the CPA onto their team versus when, at what point should they really be looking at, and how do you make that decision? I think is really what I'm asking. How do you know when it's time?
I think first it will be the type of real estate investing that they're doing. Are they, actually purchasing single family residences and they're going to rent them long term? So probably their ramp up there will be one a year. As opposed to the investors that wholesale or flip, and they have a lot more activity earlier in their business. The flippers, and the flippers definitely, they should just start out with a CPA, start out with a bookkeeper, because there's a lot of high volume. Think of how many Home Depot receipts you have when you start.
Shove them all into one folder, and then hopefully we can count.
Right. Trying to catch that up at the end of the year rather than getting on it right away. You're going to be like, what was this receipt for? Was it for Main Street or Elm Street?
Right.
It's just get with somebody that has a system and can say, okay, keep your receipts this way. So I think that they need outside assistance or guidance sooner, and probably right from the get-go, as opposed to a long-term property investor that's buying, holding, and it's, residential rental. Now the short-term rentals, those can get active quickly as well.
Yes.
So it's going to depend on activity. The lower the activity, the longer lead time they have before they really need to incur that budget to hire a CPA. But that doesn't mean they don't need to do their bookkeeping. They need to keep up with their bookkeeping right away.
Right. Yeah, I love that.
Is that what you're asking, JD?
Yes.
Yes.
100%.
100%. It's hard, especially because a lot of times real estate investors, they're very driven and very mission focused, and they're looking, okay, how do I get the next deal? How do I get the next house? And then the bookkeeping oftentimes is an afterthought, where I think if you were talking to a CPA and somebody who could get you on a right system in the beginning, it makes your life so much easier. Do you have any recommendations for the type of system these guys should be keeping to keep them out of trouble?
Yes, and those systems will vary. So we'll go low activity versus high activity. So the flippers and the short-term rentals, they need a receipt management type software. We use HubDoc in conjunction with QuickBooks Online. Now, QuickBooks Online has plans to develop their own internal HubDoc.
Oh, nice.
We are beta testing with that right now, and it's not quite ready, but they do make constant updates. So when it's ready, I'll tell y'all.
That'd be great.
But yeah, HubDoc, Melissa can tell you, you've got the app, you can email it, you can scan it, you can take a picture. Once it's there, it's there. So if you do have a bookkeeper, that bookkeeper, you don't need to change folders anymore. You don't need to change, drop off a shoebox. It's just there. They can go in every day, code the transactions, because the actual receipt is there. And if you just write on the top of it, oh, this is for ABC Street, or this is for Elm Street, then you can job cost that too. So you can track it all based on the project or property that you're working on. But HubDoc is a great
Yeah.
receipt management tool.
Mm-hmm.
And when you do connect it with QuickBooks, it'll push that image of that receipt right into QuickBooks. So in the event
The
that,
text too. Yeah, everything. It's really cool.
yep. So you're at the end of the year when your CPA is preparing your tax return and they want to know, oh, you have this much in repair cost. Is any of this capital improvements?
Mm.
They don't have to ask you that. All the receipts are right there. They just look.
Right.
And it limits the back and forth. It cuts
Yeah.
down on the time it takes to prepare your taxes, which means the tax bill will be less. So getting that right technology will help you also save on your expenses.
Right.
Mm-hmm.
How about a lot of our listeners are wholesalers, and so kind of what you have me do is send the HUD over, and so you're able to just take that assignment fee. Can you elaborate any more on that part of the business of run if you're just solely doing a wholesale business and nothing else?
Yeah, now the way that we track wholesales is kind of how we track for flips. We will set the property address or the legal description up as a customer. So when you have you get the first HUD, it goes in, that's like your inventory, your cost basis. And then when the second side, the wholesale is completed, that is your revenue on
Right.
the inventory that you purchased. So at any point in time, we can go back and we can say, I want to see Melissa and JD's wholesale activity. We can get a profit and loss by each property that was wholesaled. We can do it by time period. It can be sorted any number of ways. And then you can also look at your financial reports by, well, pretty much by any method that you would like to.
Mm-hmm.
You can see your flips versus your wholesale versus your rentals, as long as it's all tracked in that manner. But yeah, the wholesales will sit there as inventory until the cycle is completed. And that helps keep it out of your profit and loss, your taxable income. If you do something right at year end, you don't want it to be taxed until you complete it.
Right.
So that lets you move that revenue into the next tax year.
Is there any way to, it just made me start thinking about it. We would love to figure out how much each wholesale deal costs us in marketing. And it just made me think, I don't know how we would be able to do that.
Well, if you're doing specific expenses related to it, as long as that is tagged on the bill or the receipt, it's being tracked that way.
Okay.
If you're doing any broad SEO optimization, that level isn't tracked, but it can be allocated. So we typically do a 12-month look back. So when 2020 ends, we'll see what your advertising budget was, and we'll get a percentage, and we just apply that percentage to the next year. So that's how you would allocate our job cost, overhead type expenses, or all encompassing that aren't specific to that wholesale.
That makes sense. Okay.
Right. I guess the next question I have, and it's something that Melissa's been harping on me for, but I have a hard time doing it, and that is trying to tax plan before you decide in the last month of the year to sell your duplex, and that kind of stuff. how would you recommend these investors go about the pre-planning stuff? What kind of information do they need to have to bring to their CPA? What kind of questions do they need to be asking to get the answers that they're looking for?
Yeah, that comes back to having always up-to-date books. Because if they're up to date and you have a contract on your duplex and you want to set a closing date, we can run down and do a tax projection and say, if you close in 2020, the tax associated with that is this. If you close in 2021, the tax associated with it is this. So then you can make the decision. And sometimes we can even tell you, you know what, tax changes are coming. Go ahead and do it now.
Right.
Sell it so you can close before the 31st. And then on occasion, there's sometimes that you can work it with the title company that it's held in escrow and it doesn't actually close till the following tax year.
Right.
But to make those decisions, you need to know where you are in the year and also what your projections are for the following year.
Yeah,
That's good stuff.
that is really good stuff. The other one that brings up is when or how do you make the decision whether or not we should file for an extension on our taxes?
That there is no rhyme or reason for filing an extension. There's also no red flags associated with filing extensions. That's a common misconception. Oh, if I file an extension, I'm going to get audited. No, there's no connection there. When you have certain funding events that can carry over from one tax year to another, so IRA contributions, retirement plan, 401k, defined benefit, those types. The tax rules there say you have until April 15th of 2021 to fund for 2020. But it's a date or your extended date.
Right.
Sometimes filing an extension gives you time to get that extra cash together.
Gotcha.
To fund for the prior year. And that's when you would want to file an extension.
Right.
But most of the time it comes down to, are you ready?
The answer is always no.
Do we have everything?
Nope.
And also, have you received everything?
Yeah,
There's a lot of times you're not going to get 1099s from Airbnb or VRBO. You know, they may come out late. In recent years, they're coming out amended. So you don't want to file too soon, because if one of those entities issues you an amended 1099, then you've got to go amend your return.
Yeah.
So there's a lot to be said for filing an extension. But if you're expecting a big refund and you want to use that money, file sooner.
Yeah.
So again, it's a individual situation.
Right.
As to ultimately making that decision.
Well, we want to be respectful of your time because I know you're super busy. Can you tell our listeners how to get in touch with you or how to reach you?
Yes, you can reach us through the website bookkeeperexpress.com. Also, our phone number, it's a toll-free number. It's 888-672-9765. And for y'all's listeners, we have a free download for real estate investors.
Yes, awesome.
The infographic and a chart of accounts. So if they're going to want to do their own bookkeeping, they can download this chart of accounts, and it exactly matches the tax forms they will file.
Very nice. Thank you, Rhonda.
So you can get that at bookkeeperexpress.com/real-estate.
And we'll put this in the notes.
Yeah,
We'll put this in
definitely.
the notes that they can read to get that and
Okay.
links to it.
Yep.
Yep.
And if they have any questions, they can also email us, contact us through the website or email us at resources@bookkeeperexpress.com.
Perfect.
Perfect. Awesome.
Well, thank you, Rhonda. That was awesome.
Thank you, Melissa. Thank you, JD.
Great. Well, we really appreciated having you on.
Mhm.
We know your time's valuable, and I hope you have a wonderful rest of the day.
You too. Thank you, guys.
Rhonda.
All right. Bye-bye.
Thank you for listening to the Real Estate Jam.
Thank you.
Thank you. Thank you. Thank you. Thank you for all you do.
We hope you enjoyed today's episode. For more information and updates, check out our website, shorefrontrestorations.com, or find us on Instagram, Facebook, and LinkedIn at Shorefront Restorations. If you have any questions, feel free to drop us an email at info@shorefrontrestorations.com. See you next episode.